Hey there, welcome back to our channel. Today, we're diving into episode 465. What are discount points on a mortgage for 2025? If you're navigating the world of home buying or refinancing, this is a game changer you won't want to miss. Let's break it down step by step so you can make informed decisions. First off, what exactly are discount points? They're a way to lower your mortgage interest rate by paying an upfront fee to your lender. Essentially, you're buying down your rate, which means you're prepaying a portion of the interest. For instance, one discount point typically costs 1% of your loan amount and can reduce your interest rate by about 0.25%. How does this work in practice? Let's say you're taking out a $300,000 mortgage. Paying for 1 point would cost you $3,000. In exchange, your lender might drop your interest rate from, say, 6% to 5.75%. Over the life of a 30-year loan, that could add up to significant savings on your monthly payments and total interest paid. The biggest benefit? If you plan to stay in your home for a long time, think 10 years or more, these points can save you thousands of dollars. It's like investing up front for future gains. However, there's a catch. If you sell or refinance your home soon, you might not recoup that initial cost, making it less worthwhile. To decide if discount points are right for you, consider factors like your current financial situation, how long you intend to own the property, and current market rates. Always run the numbers with a mortgage calculator or consult a financial advisor to see the potential return on investment. In summary, discount points are a powerful tool for lowering your mortgage costs, but they're not for everyone. They depend on your long-term plans and budget. Thanks for watching. If this video helped you, hit that like button, subscribe for more real estate tips, and drop a comment below with your thoughts or questions. See you in the next one.